Let's get to the point around what is top of mind for you as you reflect on operating conditions both this last quarter and also what your thoughts are for the road ahead.
Thanks, Yusuf. Thanks for having me on the show. Top of mind for me is to ensure that we stick to our strategy. In spite of the gold price being near record highs in Australia, it's about improving our cost profile. We're one of the lowest cost gold producers in the world, but historically gold producers have tended to let costs inflate when the gold price goes up. At Evolution, we are really focused on ensuring that we continue to improve the quality of our portfolio and keep our costs down so that we can prosper through the cycle.
So gold's up about 20% in 2019, and we're extending gains. You've got lower interest rates, you've got some geopolitical tensions in the Middle East, and then more recently you had fears around the coronavirus. I mean, what would you say is the main driver of the rally, and also where do you think the price is going to go?
That's always a hard question, but the best analogy I've heard is that gold is the antidote to chaos. And there's lots of chaos at the moment in the world, geopolitical tensions, as you say, viruses, and very low interest rates. So the outlook for gold is very positive. The Australian gold producers like Evolution have benefited from a declining Australian dollar as well. And the headwinds in the currency seem prevalent as well. So we're benefiting both ways, a higher gold price and falling currency, giving us record levels. And as I said, Evolution is making lots of money. We made $240 million of cash in the last 6 months. That was at a lower gold price. We're paying our 14th consecutive dividend after recording record profits. And this dividend is going to be 7 cents a share, which is 3.5% yield.
Jake, is there more potential for additional divestments from some of the largest producers, or is that process largely exhausted, would you say?
Well, we've benefited from the fact that in November last year we announced that we were acquiring the Red Lake mine, which is a very significant historic producer. It's produced over 25 million ounces in Canada. Newmont was selling that, and we've acquired it. The transaction should settle in at the end of March. We certainly are working on the integration of Red Lake and believe that it will be a cornerstone, highly efficient. We've got to transform it into a highly efficient, low-cost mine, cornerstone asset for Evolution. I think you're going to see more asset trades, but I think what Evolution, the lens we look at things through, is can we add value? And at this point in time, I'd say that Australian producers are quite well valued. Will there be more assets coming out of majors? I think time will tell, but the bulk of the sales seem to have been made.
I mean, what is clear is that a lot of your focus for additional assets is sort of geared towards North America. Is that going to continue being the focus?
So we've said at Evolution that we think we can manage 2 jurisdictions without losing what I believe is an absolutely critical component of Evolution, and that's the culture. A culture where people are empowered and energized to do things. They feel part of the company. So 2 jurisdictions, and Canada we've been looking at for the last 2 or 3 years. We've kicked a lot of tires, but Red Lake met our criteria for investment.
I mean, you talk about criteria for investment as investors looking at the Evolution Mining play, is trying to understand, I mean, what are some of those criteria? What makes North America so attractive to Australian gold producers?
Can you add value to the assets? And the starting point for that was what was our geological view, and our geologists in the due diligence came back very excited about the potential, the discovery potential. So we can find more ounces there, and also the fact that the asset, which has historically had a grade of 3 or 4 times higher than the current head grade, seems to have a cost structure which is still matched to the very high head grade, which was in the 40 gram per tonne category, and they're mining 10 grams a tonne. So there's a real turnaround opportunity to change that cost structure and make it a more efficient mine.
Also, what are the longer-term implications of the drought conditions, the drier climate on Australia, and sort of how critical are these issues for your ability to efficiently run your business?
Yeah. So Cowal is our mine. It's our flagship mine in Australia, and it's in New South Wales, which has been suffering an extended drought. We took steps some time ago to reduce our reliance on surface water. We currently depend on about 20% of our daily requirements on surface water, and we have a plan in place to take that to zero. That involves investment, water-saving techniques, increased reliance on saline bore fields, and we're implementing that so to mitigate any potential extended drought or increased water restrictions in New South Wales. We think our plan will make us independent.